All right, let's get started. Good morning, everyone. Thank you for joining us today for our very first Let's Talk Business event. My name is Contessa Hood, and I am the Economic Development Coordinator for Greater Muskegon Economic Development. And with me, I have Ms. Jen Leckley, Executive Manager for the Muskegon Lakeshore Chamber. As we all know, so much of what makes our Muskegon Lakeshore community so special is the homegrown shops and restaurants and the spirit of entrepreneurism. In an effort to help keep this spirit alive, the Muskegon Lakeshore Chamber and GMED have launched this brand new series, which will focus on highlighting local business resources to help empower our entrepreneur and small businesses to be successful. The Let's Talk Business series will focus on a wide variety of topics for each event, from supplier development to marketing to leadership and everything in between.
So before we get started on today's topic of business financials, I would like to recognize and thank our event sponsor for today. A big thank you to the Nu Phi Omega chapter of Alpha Kappa Alpha sorority for supporting our very first event of the series. We are happy to welcome Kimberly Thornton with AKA to give us a 1-minute commercial to kick off our event. Welcome, Kimberly. I think you're on mute, Kimberly.
Good morning, everyone, and thank you, Jen, for having us and allowing us to sponsor this great series. I'm very excited to be here. As a member of Nu Phi Omega, I belong to a sorority, Alpha Kappa Alpha Sorority Incorporated. We're dedicated to implementing programs of service that enhance the social, economic, and educational well-being of the local, national, and international communities in which we serve. Programs remain a heart of AKA. The size and scope of services provided to our communities have grown and significantly improved the quality of our communities. Our program theme for the 2018-2022 campaign season is Exemplifying Excellence Through Sustainable Service. Our international program includes 5 program targets that are designed to advance the mission of Alpha Kappa Alpha with excellence and underscore our commitment to sustainable service. One of our targets, which is good for today and it's related to today, is Target 3, Building Your Economic Legacy. It allows Alpha Kappa Alpha to emphasize financial planning, asset accumulation, and wealth building, including savings and investment, managing debt, and improving credit. I would now like to share my screen with some programs that we will be having in our community, some areas of focus. Can everyone see that? Hopefully you can. So 4 areas that we are going to focus on are personal financial planning and asset accumulation, credit repair and monitoring, entrepreneurship and the Black Dollar 365, Operation AKA Assist. And I'll give you a few moments to review some of those things as I wrap it up. We will, as a chapter, be having these events focusing on those areas throughout the next year in our community. So please look forward to some of those things. They will be advertised. And on behalf of Nu Phi Omega, we are thankful to the Muskegon Lakeshore Chamber of Commerce for allowing us to participate in the first Let's Talk Business series. Thank you.
Thank you so much, Kimberly, and Nu Phi Omega chapter of the Alpha Kappa Alpha sorority for your support in this event. Well, we have a very packed agenda today, so let's jump right into our program. Today, we will highlight 3 experts in the world of business financials. Ryan Breicher with BDO, Tamara Jackson, Gatewood and Huntington Bank, Ashley Forrest with Forrest Tax and Accounting Services. Each of the 3 speakers will have roughly 10 minutes to present on their various topics. During each presentation, we encourage you to take advantage of the Q&A feature at the bottom of your screen. After each presenter is finished, we'll have a couple of minutes set aside to answer any questions that come through during the presentations. Since we are in webinar mode, you will not be able to visibly see other attendees that are present for today's event. but we would like to encourage you to say hello and drop your contact information in the chat feature below if that is of interest to you at all. So just to reiterate, your questions for the presenters will go into the Q&A feature and hellos and contact information in the chat feature at the bottom of your screen.
All right, so let's get started. First, we have Ryan Breiker. Ryan is a business advisor and tax partner with BDO USA. He co-leads the Multicultural Alliance inclusion efforts, as well as the manufacturing industry group for BDO's West Michigan practice. Ryan has a passion for client and community service. He appreciates collaborating with appropriate partners professionally and personally to help provide solutions to those in his community. Most recently, Ryan and his family established a new nonprofit entity, the Muskegon Lakeshore Paddle Club, MLPC, where he is currently the president and chair. MLPC was established to facilitate fundraising for community organizations and to host paddle races to celebrate taking it outdoors along our beautiful lakeshore. Additionally, Ryan is a board member of the West Michigan Symphony, as well as an active committee member to the Muskegon Lakeshore Chamber of Commerce and Grand Rapids Chamber. Welcome, Ryan.
Thank you and good morning, everybody. Let's see if I can pull up my slides with a little interruption. One moment. Sorry, I knew this would take a second. There we go. Can you see that okay, Jen?
Yep,
Or is it-
you're all good.
Okay. All right, thanks everybody. The first step here, I think, was titled legal structure. This is more of a tax and legal entity structure on how companies in the real world normally function and operate. So, and I'm going to use kind of a story to explain each of these type of entities. Included on the slide is some common due dates, just for reference. But okay, so my wife used to be in public accounting with me. She went out on her own, if you will. She retired from public accounting, started her own consulting practice on the side, started working with my parents, frankly, and started on her own as a Katie Breiker, no legal entity. After getting a couple other clients, she and you as entrepreneurs, you'll discover this, what kind of business you are starting. It could be a lawn business, painting, etc. When you start a business, you operate independently, and you get to a point where you realize there's liability issues. Maybe you need insurance coverage, things like that, and you need to create an entity to protect you from legal liability protection. So that's most commonly people set up an LLC. Many of us have probably heard of that, limited liability company. Very flexible, can be owned by a single person. And so in this case, you know, my wife would own this LLC. It's a separate company, a separate legal entity. So if there was a bad event, if she was sued or otherwise got in trouble from a liability perspective, the LLC would protect her personal assets, which is the reason to set up the LLC. The next step in a growth trajectory for a lot of entrepreneurs is you need to onboard a partner. You need help to expand your business, and the way to do that is to bring on another person. Obviously, maybe it would be called a partner. You can have a partnership without an LLC, but many times it's actually an LLC with 2 or more members that can be infinite. Again, very flexible in that regard. Again, I included the filing forms, Form 1065, and the due dates. So I won't get into the details. This is I would say, entrepreneur entry-level training, but the next step could be that there's an avenue and a reason to become an S corporation, and that's the primary reason is to limit exposure to self-employment taxes. And for those of us, and we all know 15% of wages effectively is attributable to taxes. I won't get into too much more of that. We don't have a lot of time. Finally, I'll touch on a C Corp. A C Corp, the reason to set up a C Corp is the ease of transferability. This share, sell and transfer a stock. For example, a publicly traded company, the stocks owned are very easily traded on the public exchange. The next slide here, we're going to touch on operating agreements and financial statements. So going back, we talked about LLCs being a very common entity structure for entrepreneurs in startup businesses. Operating agreement is effectively, you think of it as the rule book for how this entity is going to function. How are profits going to be shared among the members? What happens if someone dies? The operating agreement is meant to be a playbook for the day-to-day, but also contingency planning. Like I said, if someone dies, if the company were to be sold someday, how does that happen? It's very important to get these started off on the right foot when you start a business, especially when you start bringing unrelated parties to the table. I know we all have our best intentions many times, starting businesses with friends, families, or acquaintances, and hope the best for one another. But unfortunately, in the real world, things happen, people change, circumstances change, no fault of anybody, but it's good to be prepared. And most advisors, Tamara, Ashley, and others are going to be helping you through this journey and pointing these kind of questions and things out through the growth cycle. Quickly touch on financial statements. Tomorrow we'll touch on that a little more. There's three basic financial statements. Really, it's about financial presentation. So financially, how's the company doing? How can you present that information to a user of the information? So a balance sheet, this equation is one of the most important fundamentals of public accounting. So if you have CPA friends who tell you that we're really good at math, it's a lie, I promise. It's pretty simple math. Think of this as, so assets equals liabilities plus equity. Think of it as this: if when you buy a house, let's say 100,000 for easy math, you need to come up with 20% down. This formula would be $100,000 house on the left, that's the asset. On the other side, you have an $80,000 mortgage, that's the liability, and then 20,000 of your down payment or cash. That's what your balance sheet would look like. Income statement and statement of cash flows, for all intents and purposes, are very similar. If you're a cash basis taxpayer, meaning cash in minus cash out equals income or cash inflow or outflow, depending. I throw out their cash basis taxpayer. It is possible, and many taxpayers are or become accrual basis. And the simplest way to explain that briefly is a utility bill at year end. So you get a utility bill in January 2021 for services rendered in December 2020. A cash basis taxpayer would get that bill in January, pay it in January, and deduct that in January, and therefore deduct that in 2021's tax return. Accrual basis would actually take that deduction in 2020, i.e. earlier. So there's a time value of money component there, so there's a reason. And that taxpayer would deduct it in 2020, so and then have an accrual or a liability on the balance sheet. So that's how the income statement becomes different than the statement of cash flows. That's why I wanted to point that out. Finally, I want to just touch on internal controls. This is extremely important. The concept I think we can all relate to: garbage in, garbage out. An accounting system, especially when you're an entrepreneur, it could be an Excel file, it could be green bar, by hand. We've seen it all. But at some point in the life cycle, you might get to QuickBooks, etc. But what I mean by garbage in, garbage out is the data in whatever system is being used is only good as the user of that system. Internal controls are meant to be, at least as it relates to financials, mechanisms or checks and balances to make sure that data is good. For example, and also it prevents, fraud possibilities. Does the same person in a company write the check, approve a check, write the check and deposit receipts? In a small business, that's probably the case. But as the business grows and matures, at some point should consider bifurcating those responsibilities to ensure there's no misappropriation of funds or wrongdoings, intentionally or not. And unfortunately, that happens in the real world all too often. Finally, just want to touch on the concept of scams and being smart and vigilant in the environment we are in. There's a lot of resources out there. If you want an online portal, it's irs.gov. Also note, there is a ton of online email, phone call scams that try to get data, manipulating or manipulating people about possible tax liabilities or seizure of their home, etc. So be careful. The IRS really only contacts taxpayers via a letter. And there's also be mindful, especially again, as entrepreneurs are starting up and you expand and you become more and more reliable on IT infrastructure. Ransomware is very common. Holding data hostage. I mean, some companies can't function too long without their data. So keep that in mind. With that, I think I'm about out of time. Short presentation, a lot of data, so happy to answer any questions.
So if anybody in the audience has questions for Ryan, please drop them in the Q&A feature at the bottom of your screen. And Ryan, we have one for you. What are some real life examples how failing to have proper internal controls can negatively impact a business and or business owners?
Good question. There's a lot of ways, unfortunately. Some common things, again, checks and balances, but I've seen in the past, unfortunately, on the other side of some fraud, their creation of fictitious assets. Looking back at that fundamental accounting equation, if you create a fictitious asset, there's also a cash outflow on the other side. And I'm pretty sure I know of a company that had some cranes on their balance sheet, very expensive cranes that didn't actually exist, for example. Also, there's checks and balances, again, with journal entries and cash control. I've seen a lot of misappropriation of funds, not having those checks and balances in place. Also, I've seen issues with payroll. And for those who have gotten in trouble with IRS with payroll, not an easy thing to get out of. IRS does crack down pretty hard on payroll type penalties, but I had a situation where we were called in to help. Someone was doing some funny bookkeeping and check writing, and also forgot's the wrong word, forgot to remit the actual withholding taxes they were meant to, from the employee's payroll that they withheld. And that resulted in a $500,000 penalty that was subsequently argued and abated, but that $500,000 penalty could have crippled this business. And I've seen, unfortunately, there's a lot of bad, but there's also a lot of good.
And we had one more question come through. When does it make sense to convert an LLC into an S Corp?
Most commonly, it's when a operating company, meaning maybe it's manufacturing, restaurant, something like that, non-passive, so not rental property or other kind of passive investment property. Because you can make an S election, and the income, the income saved is a reduction in self-employment taxes. And I'll give an example to answer that question. So a partnership or an LLC, let's say one owner makes $100,000 a year. and distributes to themselves or pays themselves $50,000. Well, they're going to pay in the LLC setting where they pick up the income on their personal tax return. They're going to pay full self-employment, so an additional 15% on the 100,000. If you make an S election and you pay yourself the 50 that you were going to pay yourself anyway, you only pay self-employment taxes on the 50. So there's a 15% savings on the other 50. So it's a little arbitrage. So that's when you get to that point. Once you get to an operating size where you have operating income and access of cash taken out of the company, there is an opportunity to save self-employment taxes.
All right, thank you so much, Ryan, and thank you for your questions. All right, next up, we have Tamara Jackson from Gatewood. Tamara brings over 20 years of expertise in financial services, personal and business banking, and retail banking leadership to the West Michigan area. Tamara is Assistant Vice President, Branch Manager with Huntington Bank in Muskegon, Michigan. She works closely with small businesses with a special emphasis on businesses up to 50 employees. Small businesses have specific needs in business financials, planning, and lending. And Tamara has focused her efforts to ensuring that businesses have the tools they need to meet goals in these areas. Born and raised in Muskegon, Tamara received her Bachelor of Science in Business Administration and Finance from Central State University and her MBA in Global Finance from Cornerstone University. Tamara is very active in the community and spends time volunteering with several organizations such as Board of Directors for Muskegon Lakeshore Chamber of Commerce, Chamber Ambassador Committee, Muskegon Lakeshore Chamber of Commerce, Muskegon Marketing Leadership Team, Huntington National Bank, Vice President, Alpha Kappa Alpha Sorority Incorporated, Nu Phi Omega Chapter, Registered Parliamentarian and Member, National Association of Parliamentarians, Steering Committee, Muskegon Lead, Muskegon Community Foundation. She has 2 children, Lillian 14 and Carter 9, and they love reading, dancing, and cooking. Go ahead and take it away, Tamara.
Good morning, business community. Good morning, friends. Again, my name is Tamara or Tammy. Absolutely thrilled that we have some time this morning to talk small business. This is truly one of my favorite things, and I enjoy conversations on this subject a great deal. I'm one of the firm believers out there that understand and appreciate the impact that small business makes in our local economies. So the way that I've always seen it, when you own a small business, you are able to work in a community. If you have employees, it's quite likely that your employees are products of the surrounding community. So by way of your idea or addressing a need in the area, you're able to directly impact lives. And if people are working in an area, they're drawing people to the area or the community to visit, to purchase things, play in the area or community. From there, they enjoy the area so much, they may want to consider spending more time, potentially living in the area. So you see how that works? And small businesses do an exceptional job of keeping dollars in motion in various communities, and that's a good thing. It's very healthy for the economy. So kudos to those of you on the call this morning that are budding startups or seasoned business owners. You're doing an amazing job. I hope you're finding how rewarding your journey is for you. In my line of work, there tend to be some common themes that come up with regard to business financials. So I thought it might be valuable to just tailor this morning's conversation around some common questions that I hear. So I'm going to also share my screen, and I know Q&A is up and running. So if you have questions, just add them in and we'll dig into those as well. It's always fun to learn from one another. So if we have time, feel free to share experiences as well too. I feel like this is a safe space, great business owners and folks in the community, and the goal is to get better. Okay. All right. Here we go with this sharing. How am I doing? Am I good? Can I get a yes?
You are
You're
good.
A
good.
nod? Okay. All right. So one high level question that's frequently asked is, what are some common mistakes for beginners? So I've placed on this slide here. All right. I placed on this slide here just some areas that tend to come up quite often as business owners are navigating through the initial steps of organizing. So I've got listed here, not separating personal accounts from business accounts. This is by far one of the areas that gets missed. And I think it might be due to perhaps a more relaxed entry into business ownership. So, for example, a person may provide some consulting services for someone, and that person may pay them with cash or cash app money to their account. And from there, that customer refers the consultant to a friend. And before you know it, the business owner has a nice little gig going and they're getting paid for it. But each time that business owner is getting paid, they are making a sale and receiving business income, and that should be tracked in a separate business account. Each time that business owner prepares and purchases supplies and items to assist with their consulting, they are creating a business expense that should be tracked appropriately as well. So once you've completed some self-discovery and determined that you will start a business, opening a separate business checking account should be top priority. Number two, here's an important one, and Ryan touched on this a great deal. The lack of an operating agreement, partnership agreement, incorporation, articles of incorporation or the like. Again, I think this area gets missed for a couple reasons. In the process of organizing a business, we have to register our business name with the state and register for various business licenses depending on the industry that we're in and our locations. But in addition to this, we should be also spelling out how the business functions, to Ryan's point, how financial decisions are made, as well as rules, regulations, and provisions. The registrations with the state and localities don't address that. It's all a part of the organizing process. Agreements aren't required, but if you're going into business with more than one person, it's important that you have documentation spelling out how the business will operate and function. Number three I've got here is not creating the overall business structure with intention. You want to work with a specialist, a counselor, or, someone like Ryan or Ashley coming up, an attorney, to give clarity on what each of the business structures, whether it's a DBA, a sole proprietor, an LLC, a partnership, corporation, you want to get some sage advice on what each of these structures offer in terms of ease, benefits, and protections, and let that guide you in your decision making. Up next, here's a big one: lack of a business plan. A business plan is your story, and it's shared with potential lenders, investors, families, and friends. It's your living idea that brings clarity to the reader. It motivates stakeholders to support your business. Most business plans project 3 years into the future, and it can take some time to create, but it's a crucial piece of the process. Finally, don't feel compelled to go it alone. And I briefly mentioned that earlier, and so did Brian. You'll want to make sure that you involve specialists that have experience with small business organization and formation, and you'll want to make sure that they are a part of the process. You cannot over communicate that piece enough. That helps to check all the boxes on your list of building your business foundation. So I'll go to the next slide here. Here's another question that gets asked: how should your financial management change when your business starts to grow? And I appreciate how intuitive this question is. The first thing is you'll really want to make sure that you are good at the basics. That's something that Kobe Bryant that he mastered, really good at the basics. This tends to get overlooked because it is not glamorous work, but it's important work. The first one is to create a budget. Creating a budget is the first place to start with financial management practice. A budget, simply put, list of all your monthly or yearly expenses organized by categories. A budget is a tool that helps you track your business expenses, plan for the future, be economical when you need to be, plan to expand, and make a profit. And once you create a budget, you'll want to use that to compare what you've budgeted with your actual expenditures. Number two, bookkeeping is still a thing. Ryan knows that, Ashley knows that. Bookkeeping is an organized process of tracking all income and expense transactions. Bookkeeping is a critical component of financial management, which leads to better business decisions, whether that's regarding financing, taxes, owner's draw, and retirement. From obtaining business accounting software, opening the separate account that we touched on earlier, reconciling the checking account, tracking sales, depositing sales, paying business expenses, running a profit and loss statement, and maybe, just maybe, paying yourself. These steps are key to understand the ebbs and flow of your business finances. I'll move along super quick. Up next is understanding cash flow. Cash flow is simply moving cash in and out of a business. It's the balance of cash received less the amount of cash paid out over a period of time. A cash flow projection is a financial projection that tries to show how cash is expected to flow in and out of a business. And it's used to see if projected cash receipts will be sufficient enough to cover projected cash disbursements. A business can be profitable and still run out of cash. That's totally a thing. So this statement can help you manage your cash so that you can pay your bills on a timely basis. And finally, a profit and loss statement is the single best tool for knowing if your business is profitable. P&L statements, they measure revenue and expenses over a month, a quarter, or a year. With it, you'll know if you've made a profit, how much, or if you've incurred a loss. It's an important report. It reflects your business decisions on the basic buying and selling process. A P&L will tell you how well you're managing your business, and it can provide key information on how to grow it. All right. Based on these findings, you'll start to get a feel for whether or not the business is ready to grow more, okay? I've got here on the next column there, and I'm just gonna breeze past it because I wanna get to the next slide. You wanna just do an assessment just on where you're taking the business. Sometimes we get into business because we have an idea, I mentioned that earlier. And what you want to do is just kind of flesh this out, write it out. People call it the back of the napkin exercise. Is your business a go? Can it be sustained over time? And then what type of resources do you need? Do you need to get a bank involved in order to sustain the business? Will you need to add a couple of employees? And if you do, how are you going to pay them? You know, do you have the means to pay them? What's your working capital looking like? Going back to that business plan, how can I write this out so that a person that doesn't understand my business, doesn't understand the area, but I'm asking for money from them, they'll be able to understand what I'm trying to do here. All right, let me keep going here. Tools that business owners can use to stay on track. So this is another question that comes up because I think sometimes business owners like to do what other business owners are doing, but at the same time, they feel like they're out of the loop and they feel like they need something super sophisticated. Here are some quick and easy tools that business owners can use just to stay on track. The first one is wherever you're doing your banking, make sure that you are familiar with the online banking option for the bank and for your business. A lot of banks are very sophisticated now with their tools. The technology that they have out there is done so in a way to where you can really get a snapshot, of where things are. With QuickBooks, you want to make sure that you've integrated QuickBooks or some other form of software. You want to make sure that you're always syncing. And then if you are accepting credit card or other forms of payment as a means of payment, nowadays your point of sale terminals have different apps, and those different apps do have some organizational tools that you can use to stay on track as well, right within your terminal that you currently have. this was probably one of the biggest things that I wanted to talk about. And I'll try to wrap this up in 60 seconds. And it's about, is the business ready for financing? I think I might have frozen a bit. Is everyone still able to see okay and hear me okay?
Yep,
Yes.
you're good.
Okay, let me wrap this up. So what can business owners do from the begin? Oh, no, that's not what I wanted. Okay, is the business ready for financing? If you're in a spot to where now you're feeling like, I need some help from a lender so that I can move to the next phase, a couple easy things that you can do. First, with whatever bank that you're working with, make sure that you get an appointment with the banker or the branch manager that is there so you can walk through exactly what it is that you're trying to do. Allow them to take a peek in your finances so that they can get a feel for putting together a deal that will work for the business and that'll have, a decent shot for approval as well. You can never over communicate enough with your banker. Or with a bank. And there are other resources that are available in the community, whether it's the Small Business Development Corporation, the chamber as well, that can walk you through a couple of exercises just so that you are in a spot to be ready to make application. All right. I really do feel like I'm at my time. I was just going to wrap up by just saying what business owners can do from the beginning to set themselves up for success. And this was just a review of everything that we talked about. I cannot overemphasize having a budget, effective bookkeeping, make sure that you've got accurate cash flow statements. And to Ryan's point, make sure that it's got accurate data going in so that the information that's coming out is accurate. Work with a banker or work with a trusted bank manager to go over business financing, and don't go it alone. Make sure that you've got a team to assist and help you. All right, so thank you for your time this morning.
Thank you so much, Tamara. Wow, that was a great presentation. So right now we're gonna go over the Q&A portion, and looks like you have a couple questions. The first one is, what are key budget categories?
I'm sorry, I didn't get the question.
You're okay. What are key budget categories?
Key budget categories for a business. So the first thing that you'll want to make sure that you're keeping track of is all your sources of income. So for some small businesses, they feel like whatever their main source of business is the one that generates the most income. I'll give you a great example. You might have a person that is in the business of, I don't know, virtual cooking shows, but they get separate income from maybe cookbook sales. Depending on the amount of hits that they get on their videos, they might get residual income from there. So you want to make sure that your income area takes into account all of the income that's coming in. You don't want to underestimate that too much. And then you'll want to make sure that you account for all of your overhead as well. And that's everything from whatever it costs in order, for this example, for you to produce the materials, anybody that you had to pay in order to make that happen. And then you'll also want to factor in, and this is something that people do miss too, anything that you want to earmark and put away in savings too. It can be as comprehensive or as simple as you want it to be, but I guess it would just depend on, how many pieces you might have, pertaining to the business. That probably wasn't the best answer, but it can be simplistic or it can be larger, just depending on what's at play.
Thank you, Tamara. So we do have less than a minute, but can you
briefly
go over QuickBooks?
Syncing, more
QuickBooks.
info on syncing QuickBooks.
It's literally a button. It's a button. So it's just the process of getting QuickBooks to talk to your banks, to your online banking with your bank. And there's a syncing feature so that each time you're going into QuickBooks, if you're using that for the majority of the time, it's giving you more real data based on what's going on in your bank account, as opposed to a snapshot in time at a, historically. So it's a small little button that you click on, and then there's another button that allows you to instantly sync.
Awesome. Well, thank you so much. If you asked a question and we didn't get to it, if we have time at the very end, we'll ask the panelists again, or we will follow up with you after the event with some answers. But I do want to move on and introduce Ashley Forrest. So with over 18 years of accounting experience, Ashley Forrest has been at the helm of Forrest Tax Accounting Services since its humble beginnings in Muskegon over a decade ago. As the company grew to thousands of happy clients, so did Ashley's beautiful blended family of 9. When she's not spending time with her husband and children or leading her staff, Ashley's free time is devoted to serving multiple nonprofit boards that support her passion for community development. Welcome, Ashley. And let's see. Ashley, are you on mute? All right, hold on just a second, and I'm gonna check on her really quick.
I'll hop in for a second while we're hunting down Ashley. Regarding categories of expenses and budget items, I'll throw out a practice I used. I used to have rental properties myself on the side, and I did the bookkeeping for my parents growing up. And with that and learning to work with clients over time, that there's an efficiency to be gained with working with a CPA. Meaning, if you can give your financial information, you work with a CPA in a way that they can use it quickly and easily without a lot of manipulation, it saves the CPA money or time, and therefore you money. So having it organized. So what I use early on is I referenced Form Schedule E, which is the form reported for rental properties owned by individuals. And it includes several categories. So that way you can basically take your information, put it in a tax format. And if you're a tax only filer and you don't have audited financials, for example, that makes your tax return prep really easy, whether you do it yourself or you hire a CPA. So just an idea to throw out there, depending on the tax forms you file, that might be a good place to start to identify buckets of expenses. And then you can always create additional buckets for whatever's useful to the management of the business or user in the financials if needed.
Thank you, Ryan. I'm going to take the time and ask another question for Tamira. What if you are good in all areas, but you have a personal bankruptcy outside of your business that gets in the way of financial help? Does the bank have help for businesses?
That's a very honest and transparent question. I'm going to give you the best answer that I can. So the easiest way to get ahead of that is to do 2 things. Patience is going to be key on this because from a time perspective, you got to get far away from that chapter, from that chapter, that occurs in our lives. All right. And then as you're getting away from that, the behaviors have to change too. Those 2 things need to be in place in order for the score to go up. And it's also going to need to be in place so that not necessarily the banker that you're speaking with, but the person, the underwriter that's going to be making decisions on financial practices can really see on paper that truly was a chapter, and that chapter has closed and we've moved on to a new chapter. So are there some banks that assist with it directly? Yes. But I think probably the best route to go would be someone that really specializes in understanding credit reporting so that they can give some tools and tricks behind being patient, but then being creative to find some short-term ways for financing. And then also, while that's happening, is just to be able to make the corrections that are needed so that on paper, it looks different than what happened prior to, and during the bankruptcy.
All right, thank you so much for answering that.
All right, looks like we are all set. So sorry about that. Technology, am I right? So without further ado, Ashley, welcome.
Good morning. Thank you. I'm Ashley Sane. A lot of you do know me as Ashley Forrest. So of course, guys, I'm like super nervous, and then we have technology. Thank you, Ryan and Tamara, for coming in for the save. So let's see here. You guys just bear with me. I think I've worked 40 hours in the last couple of days. So we're going to screen share. Maybe this one is that. Can you guys see my screen okay?
Yep, you're all set.
Okay, so I'm just going to jump right in because we are running a little behind on time, and I have tons of notes because, again, I am super nervous. Federal taxes, just employment taxes. I would say a lot of times for a small business, in Forrest Tax, we have had our own issues. We just not knowing your filing frequency. And what that means is, when do you deposit your federal taxes? As an employer, you are obligated to pay Medicare, Social Security, federal unemployment tax, and federal withholding that comes out of your employee's paycheck. Sometimes you have to deposit after you process each payroll on that following Wednesday, or you could be a monthly depositor, which means your payment is due the following month by the 15th, or a quarterly depositor. And at that point, you can pay when you file your Form 941 or through EFTPS. If, for example, you're ever not able to pay, please file your form. Not filing your form timely, you get the largest penalties. Also, I hear a lot of business owners, they say, oh, I pay my unemployment tax. Well, there's also something called federal unemployment tax. Most employers are annual filers. However, check your statements from the Internal Revenue Service. Call them if you are unsure of your payment frequency. It is so important, and make sure you file those forms on time. Michigan taxes. For the state of Michigan, as an employer, you are obligated to remit any withholding tax that you withhold from your employees' paychecks. Again, that goes back to payment frequency. You could be a monthly depositor and you file Form 5080, a quarterly depositor, which is also reported on Form 5080. Or if your payroll is extremely small, you could file on Form 5081, which is an annual tax form. Now let's back up just a smidget. If you are a monthly or quarterly depositor, you are also required to file a Form 5081 by February 15th the following year, and also report on there your total state of Michigan withholdings and the amount of W-2s and your total wages paid. That allows the state of Michigan to keep track, to make sure that, number one, they received all of their money, but most importantly, so employees aren't stating that they worked for your company and you had this amount of withholdings. So it's really a check and balance system. Unemployment, the state of Michigan. They are the worst people to owe, okay? So make sure you file your forms on time. You respond to any notice you receive from them within 10 days. Their penalties are up here, and it is very hard. It's not like with the IRS, you can file an abatement or offer a compromise. It is, I think, a few guys that make a decision, and let's just say this, if you owe them, it is really hard to get those penalties and interest removed. So please, please, please log into your MyWham account, read any notices, Matter of fact, change it so the notices come in the mail, so then that way you can see it and you don't forget. Local taxes. West Michigan, we have City of Muskegon, Muskegon Heights. We also have Grand Rapids. If your business is located in one of those locations, you are required to withhold city taxes. I know nobody thinks about the city. I totally get it. Guess what? Those ladies over there don't forget that your business is in the city, and they will definitely send you a letter and say, hey, we're missing this form. So get registered with the City of Muskegon, Muskegon Heights, or Grand Rapids. All three of them have online portals, and some businesses, again, are required to pay monthly, some quarterly. Get in there, call the ladies. I know for the City of Muskegon, Gail is awesome. You give her a call, she'll walk you through any questions, concerns you may have. Okay. See, can you guys tell I'm like super nervous here? Common tax deductions. I have all of these things listed out, but just a few things I wanted to point out. Number one, your accounting fees are 100% deductible. See, everyone else, they're excited about meals, beverages. No, my fees are 100% deductible. So don't get afraid when you get a bill from me or you get a bill from Ryan. Our fees are deductible. No, on a more serious note, I think the biggest mistake or misconception I always see in my office, new business owners or business owners that have been doing their taxes by themselves, they come into the office with a big, huge box of receipts. And I say, what is that? Oh, those are my gas receipts. Yeah, I don't want to see those. What I would like to see and what you should want and what is the best deduction for your business, if you're going to claim gas, will be mileage. For 2020, the mileage rate was 57.5% off every dollar. And for 2021, it's going to be 56 cents. You think about it, basic math, it takes $30 to fill up your car. Well, maybe now $60, I don't know. To fill your car up, you get a couple of 100 miles, depending on your vehicle. Well, let's back up a little bit. Well, miles per gallon. So let's back up a little bit. If you factor in, say, for example, a tank of gas for 100% business miles, if you track your mileage legitimately, a mileage app or a mileage logbook, you could technically, off that tank of gas that you spent $60 on, get actually about $170 tax deduction. So it's definitely in your best interest to keep track of your mileage. And I just based those two numbers on just a common standard vehicle. And if you were driving the entire full tank of gas on mileage. So please don't think that if you spend $60 in gas that you're automatically entitled to $170 deduction. It doesn't quite work that way. Okay. All right. Oh, and of course, guys, I'm sure everyone has heard that business related and beverages are 100% deductible, carbonated and water, those type of deductions. Okay. All right. Ongoing relationships. Communication. Communication is key. Know your preferred communication method. I will be honest, anyone, they reach out to me, I tell them, for me personally, it's email. Yes, I do receive a lot of emails, but at the end of the night, when I am winding down, I look to the left, my husband, he's in his email and I'm in my email, but guess what? I'm responding, I'm catching up. So know your preference. When clients text message me, sometimes it's 3 or 4 days before I get back to them, just because I didn't see the message. Or if they call, I get a lot of those. As for Miss Talanda is what I always tell people. She'll take care of you. Transparency when you're dealing with relationships. In Miss Tamara world, how you pay your bills, that's your credit. As a business owner, your word is your credit. If you say you're going to do something, do it. If you're not able to do it, be upfront and honest. I'll give a great example. About 4 years ago, a large organization contacted my company and they wanted us to put a bid in. A few of their employees were clients of ours and other board members. And I was upfront and honest with them. Thank you for the opportunity. I'm very appreciative, but Forest Tax is not ready for a relationship of this size. A lot of people was like, why would you do that? Well, that's my reputation on the line. And that's important to me. Well, guess what? Last year, that said company came back to Forest and said, hey, we really want you to put this bid in. And I did, because we were ready. And of course we got the bid, right? They came to us, so no, but we did get the bid. However, when I reflect back on that particular situation, if I would have accepted 4 years ago, number one, we would not have that relationship because we were not ready. And it could have dampened relationships with other tax clients, other accounting clients. So sometimes just knowing when a project is too large for you will open up so many other doors. I always tell people there are tons of other respectable people in this industry right here in West Michigan. There is enough food on the table for everyone to eat. When is it time to pull back? Set relationship boundaries. I do understand sometimes clients need to call after hours, or sometimes you are a little bit lenient to those special clients. That's okay, but you have to be able to recognize when it is an unhealthy relationship. And that could be, for example, a client that is possibly not valuing your time or your product. Set boundaries. You have to set boundaries. I have clients that contact me on Facebook, text message, email, telephone, Zoom, all of these things. Guess what? Boundaries. Set them. And also know when to pull back. A client could have been with you for 10 years and they could have outgrown you, or you could have outgrown them. It is okay to have that conversation, because 9 times out of 10, when you're unhappy in a relationship, guess what? The other person is also. But you've been together for 10 years, grinding it out, and you have that history of, oh, you got a letter from the IRS, let me respond to it. Or you brought my very first product, so I owe you this. People outgrow all of the time. And you can also, when you're outgrowing, you can refer. I refer clients all the time to other accountants. I can't service everyone. You can't please everyone. Like, I had a conversation on my way into the chamber this morning with one of my employees, and I simply said to her, sometimes in life we try to complicate things instead of taking a breath and processing what you need to do or how things need to be done. It's kind of like riding a bike. Most of us, when we learned how to ride a bike, we wasn't old enough to say, well, why is the bike moving? But visually, we could see that if mom, dad, grandma, someone was paddling, then the bike would move, right? It's kind of like that with business. If you just slow down a little bit, reach out to people like Ryan and Tamara, and it's the chamber, and ask those basic questions. I assure you, you will go far. And I think my time is up here. So thank you guys for having me, and kudos to the chamber. I did say to the ladies this morning, they are very aggressive. Usually I scroll past those emails like, nope, not doing this, or that time will not work. Well, guess what? Those 2 ladies, they kept going until I finally was like, okay, I'll do it. So kudos to the chambers, and thank you again, Tamara and Ryan, for saving the day and being patient with me and helping me out. I appreciate it. So you guys all have a wonderful day. And oh wait, looks like I have a couple other slides. I gotta say one more thank you. Crystal Media, they came through last minute for me as I'm like, hey, I need slides. Help me, help me, help me. So thank you. I mean, my support system goes so far, family, friends, my husband, my staff. So thank you, everyone. And I think, yeah, my time should be up now because I'm like super nervous. Oh, wait, go to this website, throw your email in there, and everything that we talked about will be on there. Okay.
Perfect.
Thank you, Ashley.
Thank you
You're
so
welcome.
much. All right. What a great presentation today. Thank you so much, Brian, Tamara, and Ashley for joining us today and sharing your insight and resources on all things business financials. We hope that everyone leaves here with at least one takeaway that will help you in your business. We will be sending out a post-event survey to all attendees. If you have any additional questions for the speakers that were not answered today during the program, please feel free to include them in your survey, and we will be sure to get those answers to you. We will be hosting 2 more Let's Talk Business events this year, so be on the lookout for those details coming soon. Thank you again so much. We hope you have a lovely rest of your week, and we look forward to seeing you again. Thank you.
Thank you, everyone.